Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. On Monday, existing home sales for March declined 4.9% to an annualized 5.21 million units, and U.S. crude surged 2.7% to $65.70 a barrel after the Trump administration decided to revoke special waivers allowing some countries to purchase Iranian oil. On Tuesday, new home sales for March rose 4.5% to an annualized 692,000 units, stronger than expected. Earnings season is in full swing, and some better than expected results pushed the S&P 500 and Nasdaq Composite to close at record highs. On Wednesday, the EIA petroleum status report for the week ending April 19th saw crude oil inventory rise 5.5 million barrels. 10-year Treasuries yielded 2.52%, falling on concerns of a global slowdown as German business sentiment declined in April, as well as news that China might slow stimulus in favor of structural changes to its economy. On Thursday, durable goods orders for March rose an unexpectedly strong 2.7% compared to the prior month's 1.1% decline, and jobless claims for the week ending April 20th surged 37,000 to 230,000, probably a statistical anomaly caused by the Easter holiday. On Friday, the first estimate of the first quarter GDP came in at 3.2%, much stronger than estimates, and consumer spending grew 1.2%. Despite the good news, markets opened flat after some mixed earnings reports disappointed. Now let's take a look at some stocks. Twitter reported its first quarter financials before market open on Tuesday with earnings of 37 cents per share on revenue of $787 million. Analysts projected earnings per share of 15 cents. Twitter's advertising revenue was $679 million, increasing 18% year over year, and average monetizable daily active users were 134 million for the first quarter, up from 120 million the same period last year. Shares soared by over 12% on the news. Snap Inc. shares slipped on Wednesday morning after the company released its quarterly results during Tuesday's aftermarket hours. Snap surpassed earnings estimates, however, shares tumbled by 4.5%. For the first quarter, Snap reported a loss of 10 cents per share on revenue of $320 million. However, analysts had estimated an earnings loss of 12 cents on revenue of $307 million. Daily active users were 190 million, up 4 million from the previous quarter, however down 1 million from a year ago. Shares fell 4.5% on the news. Facebook reported its first quarter results after the market closed on Wednesday. The social media giant narrowly surpassed analyst estimates, which sent shares higher by as much as 9%. Earnings came in at 85 cents per share on revenue of $15.1 billion, and daily active users grew by 8% year over year to 1.56 billion. The company also disclosed it may be facing between $3 to $5 billion in fines from the Federal Trade Commission. 3M Company reported its first quarter results before market open on Thursday, with earnings coming in at $2.23 per share on revenue of almost $7.9 billion. The company missed its quarterly estimates for both revenue and earnings, which sent shares plunging by 10%. Earnings were heavily impacted due to a litigation charge of approximately $548 billion or 72 cents per share. 3M expects to reduce its workforce by 2,000 positions worldwide. Amazon.com reported its first quarter financial results after market close on Thursday. The e-commerce giant smashed earnings estimates. However, revenue fell in line with estimates, causing shares to rise by 1.5% during extended trading hours. For the first quarter, Amazon reported earnings of $7.09 per share on revenue of $59.7 billion, with revenue growing 17% year over year. International revenues declined by 9%. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.